Hey guys, it's Cam for Investors Underground. We've got a pretty exciting hour coming up for everyone. Today we get to sit down with one of the most colorful personalities in the trading world. He's a clinical psychologist and an active trader, but also a writer and researcher for the past 20 years. He's a professor of psychiatry and behavioral sciences, but focuses a lot of his time coaching the top traders on Wall Street and around the world. He's got a lot of insights for not only successful traders who are looking to step up their game, but also newer traders who are aspiring in the great trading adventure. It's my pleasure to be able to sit down with him for around an hour today, Dr. Brett Steenbarger.
Thanks a lot for having me. I really appreciate the opportunity to talk with you and the community and share some perspectives. I work with hedge funds, I work with prop firms, day traders, and I've gotten a front row seat on these recent markets and what's worked and what hasn't worked in terms of trading and in terms of psychology.
Awesome. So I wanted to kind of kick things off with something that might be a little bit out of left field and not so much to do with trading, but it is a question that's in context at the moment. What the hell is going on with this whole toilet paper thing? Is it just irrational panic buying, or is there something deeper to do with comfort and security going on there?
It's a good question. So the toilet paper thing, let me share a perspective. Quite a few weeks ago, my wife and I were buying a good amount of toilet paper. We saw this virus situation coming. If you follow the science-based websites, the science-based information about this viral outbreak, then you can see how it's progressing and how it's likely to progress. And so to stock up in a reasonable way with canned food and pasta, food that can last you for a while, and paper products and, cleaning products, that is not panic. That is preparation. And so I think that some of the buying of the toilet paper and things like that come from that angle. Now, what's happened more recently is that the news of the virus and the impact and the whole idea of social distancing and trying to flatten the curve, that's gotten into the public. And now the buying of the toilet paper and the buying of food products has become panicky. And so you see lines at some groceries, you see empty shelves at some groceries, and so it's really gotten to be a bit of a panic phase, just like we see in markets when people start puking positions. It becomes more of an emotional decision than a rational planning decision.
Right. I was trying to put on my Psychology 1001 hat and work out whether it was some kind of Freudian stage thing or something else. I wanted to get your professional opinion on it. Why toilet paper specifically?
I think it's a way of getting your ass wiped. Seriously, I'm not a very sophisticated person, despite my degree. No, seriously, it's one of those things that people figure they can't easily replace. And yes, you could use paper towels. Yes, you could use napkins and that sort of stuff. But those products are going off the shelves also. And so it's one of those things like, people joke about it, but then they think, oh, fuck, what if I ran out of toilet paper totally? What would I do? There's some leaves on the tree, but what would I do? And so I think there is some realistic concern that way. I don't think it's all just a psychological overreaction. I think people are recognizing that there are shortages, and they've never had to deal with that before.
Right. So you locked down at the moment? What have you got planned for the next few weeks if you're on a forced hiatus at home?
Yeah, so all the firms I'm working with, the traders are pretty much trading from home, and I'm working from home. So I work through phone, I work through Skype, Zoom, and other online platforms to connect with traders. Work at home mode and staying in place. And that's the safest place to be. So we have stocked up on food and supplies and, things like that. And we've been doing the most we can to stay connected to people even when we're doing the social distancing.
On the bright side, I guess everyone's going to have a little bit of time to do all the things they've been putting off for a while, whether it's learning something new or filing their taxes.
Yeah, yeah. And my wife is reminding me of all the things that need to be done in the home.
Yeah.
So yeah,
Nice.
it's like you can't win, you know what I'm saying? But no, seriously, I'm writing an article for Forbes right now, in fact, and it's about how people can weather this situation positively, when they're stuck at home. And the whole idea is that you can be socially distanced, but you have to stay actively engaged.
Right.
You have to be active and interactive, and okay, you'll do it online as far as getting together with people, but yes, you can take online courses. You can do things together. If you've got a partner at home, you can be creative to use this time in an engaging way. And of course, you can go outdoors. You can exercise. You just don't want to be around a bunch of people. But I think this is pushing us to be creative, to use our time constructively in an engaged way, even though we're distanced.
Just on a curiosity standpoint, do you think that there's going to be a shift towards working from home when this all shakes out?
It's a really good question, and how that shakes out is partly a function of how the virus situation shakes out. And I've been tracking this with the science-based websites and people doing research. There is a possibility that this virus has a seasonal component, and so we could be over it during the warm weather and then have it come back in the fall. In which case, the working from home and dealing with all these issues could be more than just a several-week event. And so, yes, I think it could really change social patterns, consumer patterns. A lot of these businesses that are going out of business, they ain't coming back, especially small businesses. Um, we'll see what kind of support they get from the government, but I think it's going to be a challenged environment socially. I wrote a blog post. Trader Feed is my blog, traderfeed.blogspot.com. And I wrote an article about how people are wondering, are we going to have a recession? Are we going to have a recession? When in fact, in some ways, this is more like the Depression of 1929, when real social changes occurred. It really impacted people's lifestyles. It impacted people's wealth. I see the potential for that.
Very interesting. So let's shift gears a little and talk a bit more specifically about trading. A lot of the people listening to this are trying to work out whether the world of trading is suited to them.
Mm-hmm.
So this is kind of a two-part question. The first part is, I was curious about personality types in trading. What categories of personality types do you see most commonly in traders? I know a bunch of, A-type athletes or poker players who trade, but then there are also introverted, analytical people.
That's right.
And the second part of the question is, does your personality morph to fit your trading style, or does your trading style morph to fit your personality type, or is it a bit of a mix of both?
Yeah, good questions. Yeah, and I've actually done research on this topic at a few hedge funds and came up with some interesting findings. The issue isn't so much personality type. There are successful traders of all different personality types. The issue is personality strengths. What we see with successful traders is that they have sub-distinctive strengths, period. That's important because they end up finding an approach to trading that draws upon what they're good at, what they do well. And so the question for an aspiring trader is, what do you do well and how do you do it well? Now, what we found in our research is that it wasn't just a function of personality strengths, such as someone being introverted, extroverted, that type of thing. It's also a function of their cognitive strengths, how they process information. So, for instance, some people process information very actively and interactively. They like talking with other people, and they process information socially. Other people are happiest processing information in a spreadsheet, in analyzing data. Other people are very visual and process information through charts and what they see. We all have different styles of processing information. And the question is, what is our information processing strength? What do we do well in terms of how we process information? Because you want an approach to trading that draws upon the best of who we are. So I'll use myself as an example, because I've traded since the late 1970s, so I'm dating myself. And during my career trading, I have traded and made money, and I have had periods where I shit the bed. Okay? That's a technical psychological term.
Yeah, I think I've heard that psychological term before.
Yeah. Oh, yeah, you're familiar with that. Okay, good. Okay. So when I'm trading well, what am I doing? It's short-term trading, and it's based on pattern recognition. And I get into a mind space where I'm just zen, very open-minded, and I let the patterns come to me. And eventually some pattern hits me and makes sense, and I can use that to make a trade. If I try to be a quote-unquote investor, and I get a quote-unquote thesis in my head, some opinion, and I try trading it or holding it long-term, that's when I really fail. That is not what I'm good at. Now, the reason for that is because as a psychologist, my strength is listening to people and picking up the patterns on what they're talking about. And that's how I understand them, and that's how I understand their problems, and that's how I'm able to point them in certain directions. If I do the same thing with markets, listen to them carefully and let the patterns come to me, I can be effective. I'm using the same strengths I have as a psychologist in my trading. When I get away from those and try to be someone I'm not, that's when I fail.
Very interesting.
And sometimes we get an idea in our head that we should be a certain way.
Right.
You know, so someone will see a person in your community, oh, I should trade like Nate, you know? Well, yeah, Nate does what Nate does, and he's good. But you might not be Nate. You might be someone else. You got to figure out who you are, what your strengths are, and your trading is going to be based on that.
So is that where you see people have the most success, or is that the only way that you see people having success?
You know, I think in life, that's how people have success. They don't have success by reducing their weaknesses. They have success by making the most of their strengths. And I think that's true in relationships. I think that's true in jobs, and I think that's true in trading.
So you guys starting out, we've noticed, I guess, a pretty big influx of new traders who are coming into the game, maybe in part due to the whole zero commission push from all the big box brokers in 2019. Mm-hmm. What effect do you think this zero commission thing has had on the day trading or very short-term trading game, which is, I guess, more or less, a zero-sum interaction?
Yeah, I think it encourages people to overtrade. That's my basic.
Right.
That's my basic take. I'm a big fan. When people say, let me back up. So when people say they have a passion for trading and they want to get into trading, like those are always the people who fail, right? It's because it's not a passion for trading that makes for success. It's a passion for learning markets. And that's different, okay? Real important difference. You've got to spend a good amount of time studying markets, and you've got to spend a good amount of time trading markets just in simulation mode so that you can learn what you're good at and so that you can pick up on patterns in markets. There is no performance field. Think about it. No performance field where you can just read some stuff, listen to some people, and suddenly become expert, suddenly make a living from what you do. Can people do that in sports? I pick up a book, I read about sport, I listen to a coach, and boom, I'm going to go out in the field and I'm going to be a pro and make my living from the sport. Come on. Or being a Broadway singer or an actor or actress. This takes a long time of preparation and practice. And so the new folks who are going to succeed have a passion for learning markets. The people who have passions for trading, they're never going to really properly go through a learning curve. And the best thing they could do is save their money.
Right. I often feel like people misplace their excitement about the world of trading by clicking buttons instead of by, I guess, filling their brain with information, right?
That's exactly right. The analogy I use when I first started learning trading back in the day, so, we had limited resources, but what I had was I had a computer set up, and I had one of those little dot matrix printers. You guys are probably too young to know that shit. But so I had one of those dot matrix printers, and literally every single day I printed out charts and printed out indicators, and I examined what trades set up that day and how they set up and how they could have been traded day after day after day. I did that for over a year before I placed my first trade. It was the best thing I could have done. But it was because I enjoyed the learning of it, just the challenge and the understanding. I enjoyed the intellectual challenge and stimulation. And it was only once I figured some things out that then I was ready to place some trades.
I resist the temptation to get too deep about some of my theories on human psychology on the channel, but it's one of my fears that people in this day and age don't have the patience for that anymore. With 0% interest rates for most of, I guess, millennials' adult life, they've never really been given the opportunity to get rewarded for playing the long game. If you're a good little saver and you have money in the bank, you don't get rewarded for that these days. And with social media and Instagram and getting likes and instant gratification, I kind of feel like the world might not have the patience to do what you're talking about these days.
Well, I think that is what's required for expertise in any field.
Right.
I teach in a medical school in Syracuse, New York, and have since 1985. And, people have a real desire and a passion to be a doctor and to help people. But if they aren't willing to go through the learning process, they go through not only 4 years of undergraduate, but they go through 4 years of medical school, and then they have between 2 and 4 years of residency training before they can specialize. So they're going through an amazing learning curve in order to master their field. Could you imagine someone who says, I have a passion for helping people and being a doctor, and after just a few weeks of studying, boom, they want to go in and do surgery on patients? Come on. You see? Yeah, in any field, it does not happen. You don't see people in the chess world. You don't see people in the athletic world. Tell me an Olympic athlete who has a passion for it, and they spend a little time with a coach, a few weeks, and boom, they're in the Olympics. Come on, it doesn't happen. Why should it happen in financial markets? So it takes that ability to sustain a learning curve. And what that means, and this gets back to your question about personality and trading, what this means is that a major component of success for most traders is a decent degree of intellectual curiosity. They want to learn. They want to understand. If people just want thrills, like the gambling thing, and they don't have that intellectual curiosity, they're not going to sustain a learning curve. They're better off just going to Vegas or whatever.
So in terms of new traders trying to set goals, I often see new traders come in with a lot of enthusiasm and ambition. How do you balance things so that they're setting the right goals, but are also realistic about their expectations?
The emphasis is on first developing consistency, and only then, after that, sizing up and making a living from your trading. So consistency means you study, practice, to find the kind of trading that works for you and the kind of things that set up in particular types of markets. So, with the 70-plus VIX that we're seeing recently, what sets up in markets is different than when we had an 11 VIX. And so you're studying markets and figuring out what sets up, and you're figuring out what works for you as a trader, and you're practicing that, studying that, at first in simulation mode, and then you get some profitability in your paper trading, and then you start going live with small size. But the whole focus is on consistency of trading so that you make more money per trade than on average you lose. You have more winning trades than losing trades. We keep all sorts of statistics about that. And it's only when you achieve consistency that you then bump up your size a level, and then you get consistency at that size, and then you bump up your size again and get consistency at that size, and that's how the learning curve goes. But the goal is consistency of trading rather than absolute P&L. And so we encourage people to focus on their performance statistics, not on their dollar P&L. You can trade very well on a particular day and not make money. That's okay. You're going for process. You're going for the consistency of process, not the absolute P&L. And that works over the long haul.
So kind of focus on the process, but not the outcome, right?
That's right. And so, for instance, if you're working with a baseball hitter, work on the swing, or the golfer, work on the swing and get that down consistently. And sometimes you'll hit the ball really well, and sometimes you won't, but you want the consistency of the process. I was out with my son, and we were taking archery lessons of all things. And archery is a really interesting sport because you're just standing there, a bow and an arrow, but you have to be totally consistent in your movements in order to consistently hit the target. If you start thinking about hitting the target and how many points you'll get, it messes you up. You have to be totally focused on your body and getting the consistency of your breathing, the consistency of your stance, the consistency of your pull. So it's a nice analogy for trading. It's all about the process.
Nate, you've been a bit quiet there for the interview so far. Have you got any thoughts on the topic?
Yeah, I think it was a very valid point as far as how to size up and scale up. And everybody that finds some type of success always thinks that they just have to double their position size. And I think, either double it or triple it, however large you want to go, or however you feel like you want to step it up. But it's not always the case, in my opinion anyway. But I'm curious your thoughts, because one is, I think it always comes down to the trades themselves. A lot of people just think, okay, if I want to make double, I just size in more. And that brings out a totally different set of emotional, swings that you have to go through. And then you start to make, at least when I started to kind of push more size each and every single year, you start to ask yourself, wait a minute, am I just kind of like panicking out because I have so much size, or is this, how I should feel? And you start to get away from, what you were confidently doing, confidently stopping out because you knew it was the right thing to do at a smaller size. But now you're having that internal battle. Am I doing this because I'm too large and I'm emotional, or is this just the way it is now because I have more size? So it's always a continual, back and forth, emotional swings back and forth.
Yeah, it's a really, really good point. And sizing up, size puts a magnifying glass on the emotions of trading. And because we do tend to focus on dollar P&L. So you can imagine sizing up by 100 times. I mean, it would completely distort how you view the trade. And so the best approach is sizing up gradually, building consistency, but sizing up regularly. So you're building your size rather than jumping too much at one time. Now, I'll tell you a trick that I've used at SMB, and of course at hedge funds we use this. So let's imagine you have a daily loss limit, which at a prop firm you do. If you hit a certain daily loss, then they stop you out. You're done for the day. So let's say, for argument's sake, my daily loss limit is $1,000. I'm a developing trader, and my daily loss limit is $1,000. And so for each trade, let's say, and I'm just making these numbers up, let's say for each trade during the day, I'm going to risk 1/4 of my daily loss limit, in this case $250, okay? So I'm going to size the position so that it's got a chance to succeed and not hit that stop of $250, okay? Now, let's say I'm consistent and I do well with that trading. Now I bump up my daily loss limit from 1,000 to, again, I'm going to make it up, let's say 1,600. Okay? So now I still risk 1/4 of my daily loss limit. Now I risk 400. But I'm not thinking in dollar terms. I'm thinking in percentages of my daily loss limit. So it's the exact same trade. I'm risking 1/4 of my daily loss limit. I'm not focusing on dollars. That helps take the size out of people's head and reduce the psychological tensions that people experience when they size up.
Do you have any traders on their platform where they show a percentage rather than a P&L?
Oh, yeah. A lot of the traders, obviously they show their P&L as far as when it's time to get paid. But during the discussions we have and in their focus trade by trade and during the day, it really is process focused and focused on percentage of daily loss limit, that type of thing. Yeah.
Right. So I'm curious, you often hear out there in the markets that making money releases certain chemicals that are the same as maybe doing some illicit substances or making love.
Right.
What's the science behind all of this?
Yeah, and it's true of fear as well. There are definitely brain chemicals and hormonal responses when we go into a flight or fight response, a fear response, and when we go into a reward response, and the endorphins come. And yes, those bodily reactions can influence or bias how we think about markets and how we think about trades. And so some of the psychological exercises that I use with traders are designed to counter those bodily influences. So for instance, let's say someone has made money, trade number 1, trade number 2, trade number 3, so now they've got some real P&L on the day, and the temptation would be to get overexcited, overenthusiastic, overoptimistic, and play with house money. So a psychological exercise, a very simple one that I do with people, is visualize that you're flat on the day. Visualize that you haven't made a penny, and you don't want to go down on the day, or visualize that you're near your daily stop loss limit. Would you take this next trade? Would you take this next trade if you were down money? If you would, then it's a good trade. But if you wouldn't, then you're just getting overenthusiastic.
Right, and that's to kind of like try and cleanse the emotional palate, kind of like a little ginger in between your sushi, right?
Right, that's a nice way of putting it. Yeah, that's exactly what it's doing.
So in terms of that chemical release, do you find that you see a lot of traders kind of chasing the dragon on it, so to speak? Always looking for that bigger and better high where they start to increase their risk all the time to get that same feeling?
I don't see that, and I'll tell you the reason why. Those folks never survive.
Right.
In order to get hired at one of the hedge funds where I work, you have to have a track record of success. When I went full-time at the hedge fund, I started out in the day trading world at a place called King Street in Chicago back in the day, and that's where I really gained my chops. But then I went to the hedge fund world, and I was hired by a Connecticut hedge fund called Tudor, and you may have heard of Paul Tudor Jones. And when I joined there, the minimum portfolio size for a portfolio manager was $200 million. Well, you had to have a real track record and real history of success just to get an interview. And so the people who were real emotional traders and who did things out of control, they just never got to that level of success. And so you don't see that actually in the professional trading world so much, those kind of discipline issues, because they just never make it to that level.
How about the chemical release or the emotional experience from losing? What can traders do after a losing trade or maybe a losing period to get themselves back in the right headspace?
Yeah, it's a great question. And what happens, especially with the developing trader, is that they're so into it, which is cool. They're so into it that that's their whole focus. And so their feelings about what they do, and sometimes even their feelings about themselves, rise and fall with their P&L. And so that's why in one of my books, I mention the advice that it's important to have things in your life that are more important to you than trading. Sometimes people say, I have such a passion for trading, and it's the most important thing to me, and it's all I think about. That's a vulnerable position to be in psychologically. You want to have diversification in your psychological portfolio. You want to have many things in your life going on that you feel good about and that you're into, and trading is one of them. But if you have good relationships, good friendships, if you have other activities in your life, then when the P&L rises and falls, it's not like your self-esteem is going to rise and fall with it. That's very, very important as a background. Trading is important. Developing yourself as a trader is important, but you can't make it all important, or it's going to control you instead of you controlling it.
So let's take the opposite of that. Do you think there are risks being really fired up about your trading successes?
Oh, yeah. Yeah, a lot of the riskiest times for traders are after they've gone on a run. Yeah, and I always encourage traders to think about making money as a risk factor, because it is so easy. It's back to your idea of the endorphins and the chemicals in the brain. It's very easy to get over optimistic and play with the house money. So the times where it's often most important to work on the trading psychology is when you've lost a lot of money or if you've made a lot of money. Both can really distort our perceptions.
I think that's a huge point right now, especially with this market, because a lot of people are doing extremely well. Obviously not on the investing side, but from a day trading perspective, I've been trading 17 years, and it took me 17 years to have my best week last week. But each day, and I also do this, I don't know if there's something to it, but I verbally say it, on Twitter, I verbally say things to the room, not P&L, but just continually reminding myself, same thing that Greg, who you met at Traders for a Cause, had said.
Oh, yeah.
Act like you've been there before. And the faster that you can kind of recenter, re-get back to just, zero, the better you're going to be. Because if you come in, or even at your next trade or the next day, if you come in and yep, I crushed it yesterday, all right, I'm going to go gung-ho, I mean, you're just one trade away from, oh, man, maybe I shouldn't have done that.
That's exactly right. And there have been times in my trading career, because like I said, I've traded for a while, there are times in my trading career where I've gotten in my head, whoa, I think I figured this out. You know what happens after that. Yeah, pride goeth before the fall. So, yes, a degree of humility, a degree of open-mindedness, very, very important. And Greg is very wise in that way to point that out. And you see that with the top traders. If you go to a top portfolio manager at one of the top hedge funds, and they've made some money, and you try patting them on the back and saying, "Oh, you did a good job, man," what would they say? "Don't jinx me, dude."
Yeah.
They don't want that in their head.
Yep.
And so they wire themselves in such a way that they're not going to get overconfident.
Yep.
And I think that's an important quality of success. They're focused on getting better, but they're not anchored to a particular dollar amount.
Yep. One of the I hinted to it in I do a Sunday scan every weekend, and I kind of say what I'm looking at and try to give like a psychological current event type of 10-minute spiel at the start of it. And one of the things that I kind of hinted towards, one of the biggest changes that I have made is I put in I didn't actually say what it was, but I put in a stop loss over this past year just to kind of see how I would react to that. Just because, when I start going on a tear and I can compound profits insanely, start scaling in, working out. But when I, get on the wrong side of the trade after a hot run, I get into that same situation like I was telling you. And it's like, do I stop here? Is it emotional? Is it this? Is it that? And so what I've kind of determined is that nothing good happens after 20K, right? Just like Tim Bowen, 1 year Traders for Cause, said, nothing good happens after 9 p.m. Go to bed. Same thing for me. Over 20K, nothing good happens. It's either going to be 20K or it's going to be 80K. And if I can control it every single time at 20K when I get into that situation, then I'm going to have a whole lot more money at the end of the year. And for me, I recognize that I am insanely stubborn at times, which is the worst thing that you can be as a trader.
Right.
So how do you proactively manage that? And that's one way that I've kind of found out for those days that I mismanage risk. I mean, 20K, I have a timeout. And what do you say to that I think it's a big issue for a lot of new traders. They get a little bit of a success, and then they throw all the rules out the window, and then they say, you know what, I'm going to see what it does, which is obviously famous.
Right, or I have a hot hand. I'm really seeing it well. I got to go gung-ho. But you hit on something very important, Nate. It's the idea of taking a timeout. Now, when you're trading poorly, we take a timeout, obviously, because we want to gather ourselves, figure out what we're not seeing well in the markets, and adjust our trading. A timeout is a period for mindfulness. It's a period where we can reflect on what we're doing and maybe change something in what we're doing. It's why a coach calls timeout if things aren't going well, let's say in a basketball game. So calling a timeout after you've made money seems counterintuitive. It'd be like in basketball, you've just gone on a run and you've extended your lead over the opponent and you call the timeout. But actually there's wisdom in that because, all right, we've done well, but now we don't want to get sloppy. We're going to double down on discipline. We're going to double down on our good plays, rather than get sloppy with our lead. And so it's a way to make ourselves more mindful. So I love that approach. Another thing that I like, a lot of people disagree with me on this. And so, take with appropriate grains of salt. I like having a trailing stop on my P&L.
Right.
If I've made X number of thousands, let's say I've made 40,000 on the day. I mean, that's real money. I mean, you could do something with that money. Okay, I deserve to take some of that home. If I make that amount of money and then lose it all with sloppy trading, that is going to mess me up for days and weeks to come.
Exactly.
Why go there? So I don't mind having a trailing stop on my P&L. Okay, I've made this amount. How much of it am I willing to risk in order to make that much more? But I'm going to guarantee that I go home with half of it, let's say. You see what I'm saying?
Right. Yep.
Yeah, and so I'm going to go home with a win, but I'm still going to stay in the game and, play hard. I happen to like that because it can be so damaging to do the round trip.
It's a mind game. It throws me off every single time I do something stupid, and it's really about I explain it as running on all cylinders, right? And you always want to be running on all cylinders. You want to be extremely confident, but not cocky. And if you're coming off of a loss, then you don't have that. I know I'm likely to be right. I'm taking this risk on, because obviously trading is about risk. You have to exhibit that risk. And when you don't have confidence, you're looking for the least amount of risk that you can take, which then obviously impacts your potential P&L or percentage or anything like that. So that's just been one thing that I always try to focus on, because when I'm trading well, I mean, my losses are minimal, because just sort of like you were hitting upon, I'm scaling. I scale into a winner, scale into a winner, scale into a winner. But on my losers, I don't. And so it's very rare. And I think that's also why I get into trouble sometimes with a bigger loss, because it's it's abnormal for me to run into an issue like that because of the way in which I do scale. So I was curious how if you have any suggestions on that realm.
Yeah, no, that whole idea of scaling, what I see with successful traders, particularly the day traders, is that they're very quick to take profits. And they'll let a piece of the position go, toward a more distant target, but they have some rather close targets where they'll take profits rather quickly. And so they're monetizing the move. If it goes their way, they're quick to build some cash flow in the trade.
Yep.
And then maybe half the position, a quarter of the position, they'll let it go to the more distant target. And that way, if the whole thing reverses on them, they still have a profit. And psychologically, that makes a big difference. And so that's why I find that everyone focuses on the idea, the trading idea or the trading setup. But it's how you manage the position once it's on that often is the big difference between success and failure.
Along that same note, like you just were mentioning, I like to get into a position and have an idea of where I'd like it to go. And where I'd like it to go, I may place what I call, wish orders, where, ideally I nail this stock and it flushes out because I'm short and it goes to X. And typically I spread out a couple orders, because there is also that risk that when it does flush out, you sit there and say, maybe it'll go lower. But that wasn't the plan. The plan was you were going to short and you were expecting it to go to X. But now it's at X and you sit there, maybe it'll go lower, and then it reverses. So I always like to have those out there, pay myself, and look, if it stays heavy, if it stays looking like it's going to continue to go, already locks them in.
Right. No, I think, and this is why I think trading communities can be powerful, because you can role model that for developing traders, and they can role model that for themselves. That ability to share, to observe others, to learn from others, that is really, really powerful. It's called social learning in psychology. And so by you going through that learning process yourself, you gain the credibility to be able to share that with developing traders, and they gain the opportunity to internalize that themselves. If I could just go back to your point about confidence rather than cockiness, back to my analogy of a learning curve, so in becoming a surgeon. So let's say you're on the table. You've got to go under surgery. Maybe you need your appendix out. And the surgeon comes in, and he's just pumped up. He is so excited about doing this surgery, and he is so optimistic, like this is going to be the best surgery. This is going to go so well. He's just totally fired up. And what are you going to think when you're lying there? Give me a calm, focused surgeon who knows what he's doing or what she's doing. But you don't want someone over-eager. You don't want someone over-optimistic. You want someone who's focused, who knows what they're doing, and who is process-oriented, doing the right things. And I don't think it's any different really in trading. It may not be sexy to be so process-focused and calm, but it's what gets the job done.
Some wise advice for sure. Look, I am mindful of the time that we have left together for this chat, but do you want to talk to us a little bit about your market view at the moment?
It's been a challenging set of markets for people. The volatility has created unusual opportunity, but it's also been a big distraction for people. So many things are moving, and so many things are moving a lot, that the traders I see who are following too many names, who are following too many markets and getting distracted, they're getting hurt. And so the ones who are more successful are just focusing on a few names, a few opportunities that really make sense to them. And they are trading short-term, really short-term, move to move. They're not trying to get a big idea in their head, oh, we're going to go to this level, or we're going to go down to where we were in 2000, whatever. They really are looking at levels and moves to test levels and taking profits quickly. That kind of tactical trading is what's working. The people who get a big idea in their head and just hold on, they're the ones who are suffering in their results. So if someone gets it in their head, well, it's a risk-off environment. I think we should be long gold. Well, superficially that might be true, but in fact gold has not been a good hedge. And so if you get stubborn and locked into a view, you can really, really, really get killed. So that's been a big element of what I've seen working for people, that ability to be flexible and tactical, and that ability to be focused and just follow a few things. Another thing I've seen work is teamwork, and you guys know about that from the community, that people who are sharing ideas, people who are reviewing their trading together, learning from each other, that's working. There's so much moving, so much going on that you need people calling stuff out, you need people sharing in order to have the bandwidth to figure out what's going on. So that teamwork aspect has been really important towards success. And then finally, the third thing is, again, so much is moving and so many things are moving that people are getting fatigued. And I mean fatigued in the cognitive sense, that it's hard to concentrate on the market and stare at the screens all day long. In a VIX of 12 market, you can take a break midday because nothing's happening, right? But when things are moving all day long and so many things are moving, people are looking at so many things and processing so much information that by the end of the day, cognitively, their brain is fatigued. And when we are fatigued, we are prone to errors. We're prone to mistakes. And so some sloppy trading is not because the person lacks discipline. It's simply because they're fatigued cognitively. And so taking breaks during the day and having little activity routines that refresh us, whether it's splashing cold water in your face or having a little sugar thing to eat, taking a break, doing some quick physical exercises, really, really important to sustaining the concentration.
I like that a lot, Brett, as well, for the kind of continually moving and things like that. I've found that going to the gym a lot is good.
Yes.
Making sure that you get there and do it. And even if, whether it's a good day or a bad day, it's the consistency, and it's that, whether it's 30 minutes or an hour, whatever it is, it's something that's consistent and, gives you that time to kind of just, unwind. And on that note.
And especially if I could just jump in, especially at
Yep.
the end of the day or in the morning to start your day. But during the day, okay, you might need to be near the screens, but there are very quick 5-minute, routines you can do that invigorate you, where you get away from the screen temporarily and you do the push-ups or you do the sit-ups or you do the jumping jacks or you do whatever, but it really gets the blood flowing, it gets you out of that cognitive mode, it revitalizes you, and you go back fresh.
Yeah, we've had a whiteboard in the office here, and we were doing that, saying Lucci, who you know from Traders for a Cause as well, my buddy Tyler, and a few others. We were doing that back when we were able to leave the screens, but it's been kind of difficult to do that for the last 6 to 8 months.
Oh, yeah. And, in the high volatility market, there's always that concern of missing something. But, in fact, if you get overly fatigued, then you will miss something. And so the idea is to be able to do it very quickly so that you can quickly regenerate and then get back to what you're doing.
That was really fun. You know, it's always a treat when we get to have someone new and exciting on to share with our Investors Underground members and the people who listen to our YouTube channel. Brett, whereabouts can people get in contact with you or find out more information about what you've been up to, or maybe read some of your further thoughts?
Oh, this is absolutely my pleasure. My blog is traderfeed.blogspot.com, and my email contact is on that blog. And if people have questions, they can feel free to reach out to me, and I'll be delighted to help them in any way.
Let's try and not make this a once a year kind of occurrence. You know, it's always fun when we get together, whether it's just on the phone or in person at Traders for a Cause or one of the other events. Don't be a stranger.
And at some point, we won't have to go through social distancing, and we will find some appropriate venue with appropriate drinks, and we'll get together in person, and we'll make a fun meetup of it.
I'm in.
All right. Okay, I'm looking forward to that. I think when all this is over and we're able to get together, we're going to appreciate those little things so much more.
I think you might be right. Thanks again for your time, Brett. It's been a pleasure.